With the world more connected than ever, investing globally is becoming the smart way to make your money work harder. Global funds let you own a slice of top companies worldwide. Think US tech, European healthcare, and Asian innovators, all in one go. Instead of picking individual stocks, a global fund spreads your money across hundreds or thousands of companies, cushioning you from shocks in any one market. This built-in diversification and flexibility are why both beginners and seasoned investors are flocking to global funds for their ISAs and pensions. But with so many options, where do you start? That's where expert lists from AJ Bell and Fidelity come in. They narrow down the choices to their top global fund picks for 2025. Today, we'll put those picks under the microscope to help you find the right fit for your financial goals. Let's break it down. A global fund is a collective investment. Lots of people pool their money, and a professional manager invests it in companies around the world. You buy units in the fund, not individual company shares, and your returns depend on how the fund's investments perform. Unlike funds focused on one country or sector, global funds can invest almost anywhere, from US giants to emerging markets like India or Brazil. The manager builds a balanced portfolio across regions and industries, technology, healthcare, finance, and more. This means your investment isn't tied to one economy or sector, making it a smart choice for long-term growth. For a single, low-cost investment, you get instant diversification and professional management. That's why global funds are a compelling way to build wealth over time. When seeking investment guidance, reputation matters. AJ Bell and Fidelity are two of the UK's most trusted investment platforms, known for research and customer support. AJ Bell, founded in 1995, is popular for its user-friendly platform and its favourite funds list, expert-picked funds with strong track records. Fidelity, a global investment giant, curates the Select 50, a shortlist of funds chosen for their long-term potential. Both lists are rigorously selected by in-house analysts, making them a valuable starting point for investors. Their recommendations aren't personal advice, but they help cut through the noise of thousands of available funds. When a fund makes these lists, it's a mark of quality and value. Let's see what AJ Bell recommends for global investing in 2025. Their favourite funds list highlights experienced managers with clear, repeatable strategies. A standout is Fundsmith Equity, managed by Terry Smith, focusing on a concentrated portfolio of high-quality global businesses like Microsoft and L'Oreal. Smith's approach: buy great companies, don't overpay, and hold for the long term, avoiding complex sectors like banks and airlines. AJ Bell also features funds with ethical or sustainable focuses, appealing to investors who want their money to make a positive impact. For cost-conscious investors, they include a global index tracker. Let's call it the Global All-Cap Index Tracker, which simply mirrors a global stock market index at very low fees. This mix of active and passive options gives investors flexibility, whether they want steady growth, ethical investing, or low costs. AJ Bell's list is designed to be simple, reliable, and suitable for a wide range of investors. It's a solid foundation for anyone looking to diversify globally. Now let's see how Fidelity's picks compare. Now, let's look at Fidelity's Select 50. Fidelity's list often features funds with unique strategies, like the Rathbone Global Opportunities Fund, which seeks out overlooked, innovative companies worldwide. This fund is more diversified than Fundsmith, holding 50 to 60 companies and focusing on finding future winners before they go mainstream. Another regular is Fidelity Global Special Situations, a flexible fund that invests wherever the manager sees the best opportunities, often targeting companies undergoing positive change. Fidelity also includes value-oriented funds. Let's call one the Global Value Leaders Fund, hunting for solid companies trading below their true worth. This approach balances growth and value, offering different ways to capture global returns. Fidelity's list is for those who want a broader range of active strategies and are willing to pay a bit more for expert management. Their picks reflect a belief in skilled managers and diverse investment styles. Let's compare how these top choices stack up. Comparing AJ Bell and Fidelity's top picks reveals both similarities and differences. Both platforms believe in active management, skilled managers making key decisions to outperform the market. AJ Bell leans toward focused, quality growth funds like Fundsmith and includes a low-cost tracker for fee-conscious investors. Fidelity favors more diversified, flexible funds and a wider range of active strategies, including value and special situations. AJ Bell's tracker option appeals to those who want simplicity and low fees, while Fidelity's list is all about active management. Both sets of funds are globally diversified, but their regional and sector tilts can differ, affecting performance. Ultimately, it's a choice between concentrated quality and diversified opportunity. Your preference depends on your goals, risk tolerance, and investment style. Ready to choose a global fund? Here are some quick tips. Check the ongoing charges figure, OCF. Even small fees add up over time. Don't just pick last year's top performer. Look for a fund with a clear, long-term strategy that matches your goals. Read the fund's fact sheet to understand its style, growth, value, or quality, and top holdings. Invest for the long term, ideally 5 years or more, to ride out market ups and downs. Consider your risk tolerance. Are you comfortable with volatility, or do you prefer a steadier path? You don't have to pick just one fund. Blend a low-cost tracker with a specialist active fund for balance. Tailor your portfolio to your needs and beliefs. The most important step is simply getting started. In 2025, keep an eye on inflation and interest rates. Central bank moves can impact markets and fund performance. The US tech sector still dominates, but watch for shifts as other regions or sectors gain momentum. Political events, like elections, can cause short-term volatility, but global funds are built to weather these storms. Pay attention to investment styles. Growth has led recently, but value could make a comeback if economic conditions change. AJ Bell and Fidelity's recommended funds have different style biases, so mixing styles can help balance your portfolio. Stay informed, but don't try to predict every twist in the market. Focus on long-term growth and diversification. That's how global funds help you navigate uncertainty. So, which platform's picks are right for you? AJ Bell's focus on quality growth and low-cost trackers suits beginners or cautious investors who want simplicity and reliability. Fidelity's active, style-diverse list is ideal for those who want more choice and are comfortable with higher fees for expert management. There's no single best answer. Mixing approaches can give you the best of both worlds. Use AJ Bell's tracker as a core and add a Fidelity active fund for extra style or strategy. The key is feeling informed and confident in your choices. By understanding your options, you're taking a big step toward financial security.